The United States of America and the People's Republic of China are engaged in an ongoing economic war known as the US-China trade war. President Donald Trump of the United States started imposing tariffs and other trade barriers on China in January 2018 to pressure China into changing what the United States claims are unfair trade practices and theft of intellectual property. The Trump government claimed that these might add to the trade imbalance between the US and China, and that China's government demands exporting America's technology to China. China's government retaliated against the US trade sanctions by accusing the Trump government of acting in a nationalist and protectionist manner. A difficult Phase 1 deal between the two parties was achieved in January 2020 as the trade war deteriorated through 2019. It ended in December 2021, with China significantly failing to fulfill its obligations to buy American products and services as agreed. The trade war was mostly a disaster when Trump's presidency ended. Let's discuss the US-China trade relationship. Since China's economic reforms began in the late 1970s, the US-China trade in goods had increased significantly. In 2001, after China joined the World Trade Organization, the WTO, China grew more quickly, with the US and China emerging as the two largest trading partners. The bilateral trade deficit of the United States in commodities with China increased to $375.6 billion in 2017. In general, the US has imported more goods from China than it exports to China. The US government has occasionally questioned several aspects of the US-China trade relationship, such as China's significant bilateral trade imbalances and very rigid exchange rates. To protect US domestic textile producers, the governments of Bush and Obama put restrictions and tariffs on China's textiles, alleging that China was exporting these goods at below-market rates. Additionally, the US alleged that China was subsidizing aluminum and steel production during the Obama administration and launched several anti-dumping investigations on China. China's economy expanded throughout this period, passing the US to become the world's second largest. Some US authorities expressed concern over China's massive economic plans, such as AIIB, the Asian Infrastructure Investment Bank, the Belt and Road Initiative, and Made in China 2025. The US government generally sees China's economic development as a threat to American geopolitical and economic dominance. Most economists think that macroeconomic causes, rather than trade policy, are to blame for the American trade imbalance. The US trade imbalance will remain constant due to trade diversion, even though trade tariffs on China's goods are anticipated to reduce US imports from China while increasing imports from other nations. The US economy is seen as being most dependent on technology. Lighthizer claims that China pursues a forced technology transfer strategy and engages in state capitalism, comprising the acquisition of US technology firms and the use of cyber theft to acquire technology. Resultantly, by the beginning of 2018, the Trump government was taking steps to prohibit Chinese state-controlled firms from acquiring American technology firms and to restrict American firms from handing their important technologies to China as a prerequisite for joining their market. American evaluations of the actual theft of intellectual property and foreign ownership limitations that compel foreign enterprises to give up technology were used to establish the levy's size. Chinese companies are granted unauthorized access to the technology of America through these coercive joint ventures. Robert Lighthizer looked into China's suspected unfair trade practices in August 2017. There's a need to discuss the effects of the US-China trade war. Let's discuss its effects. According to a United Nations analysis from November 2019, the United States tariffs on China are damaging both nations' economies. It's increased the cost of production for businesses, raised consumer prices, and put farmers' finances at risk in the United States. The trade war in China slowed the country's already lagging rates of industrial and economic output development. Many American businesses have moved their supply chains to other parts of Asia, raising concerns that the trade war could cause an economic decoupling between the US and China. While some countries gained from greater manufacturing as output was relocated, the trade war has also hurt their economies. Additionally, it brought market instability. Governments worldwide have started taking action to repair some of the harm brought on by the economic battle. By the end of 2019, the US had levied tariffs on Chinese imports totaling around $350 billion, while China had levied duties totaling $100 billion on US exports. Here we discuss China's side competition in this trade war. China said in April 2018 that it would repeal regulations requiring multinational shipbuilders and automakers to collaborate with state-owned partners. Those commitments were emphasized by China's President and General Secretary Xi Jinping. They reiterated the country's readiness to increase imports, loosen restrictions on foreign ownership of manufacturing, and enlarge intellectual property protection, all major issues raised by Trump in his criticism of China's trade deficit. In response to the trade conflict, China increased its personal income tax exemption to 5,000 RMB in January 2019, and decreased its top-level value-added tax rate to 13% in April 2019. Mortgage, interest, medical, educational, and childcare expenses can all be written off as tax deductions. The entire amount of tax cuts was around $324 billion. China's industrial output grew by 5% in May 2019, the lowest in 17 years. Compared to the prior year, exports decreased by 1.3% in June, while imports decreased by 8.5% and 7.3% in May and June respectively. 2019 had the worst economic growth rate, 6.1%, since 1990. Chinese nationalism increased due to the trade war, which, according to the South China Morning Post, also assisted the Communist Party in shoring up much-needed internal support. While the competition of the United States of America in this trade war is here. The tariffs had positive and negative effects on the American economy by early July 2018, with certain industries reporting employment growth and others announcing layoff plans. According to American experts, consumer goods were most likely to be impacted by the tariffs. China's aggressive trade actions had especially negative impacts on American farmers. The American Farm Bureau reports that agricultural exports of the United States to China fell from $24 billion to $9.1 billion in 2018. According to USDA data from August 2019, Canada's wheat exports to China increased from 32% to 60% as America's wheat exports to China decreased. Farmers' unwillingness to invest in new equipment harmed the sales of agricultural equipment manufacturers during the first quarter of 2019. Nevertheless, polls from July 2019 revealed that most farmers were still in favor of Trump, with 78% believing the trade conflict will ultimately benefit American agriculture. PIIE analysis revealed that in January 2018, before the trade war started, China placed consistent tariffs of an average of 8% on all its importers. Bills on American imports rose to 20.7% by June 2019, while they fell to 6.7% for imports from other countries. The investigation also revealed that by August 2019, the average American tariff on China's goods had climbed to 24.3%. Due to uncertainties brought on by the trade war, American manufacturers have reduced their capital expenditures and delayed hiring by September 2019. However, it has some consequences on the overall economy as well. According to research, the trade war neither accomplished the fundamental goal of resurrecting American manufacturing, nor did it restore factory production. Even while the trade war increased employment in some sectors, tariffs resulted in a total loss of industrial jobs in the United States. In 2019, the trade conflict decreased America's trade deficit with China. However, in 2020, this trend was reversed, and the U.S. trade deficit increased as the U.S. trade deficit as a whole increased as well. Thanks for watching. I hope you liked the video. Like, share, comment, and subscribe for more valuable content.